Hi, I'm Lee Reams, and I'm going to talk to you today about the unemployment legislation that's currently pending in Congress that can affect how you do your tax returns this year. Anyway, it's proposed legislation, and it would be retroactive to 2020. And Senator Dick Durbin, a Democrat of Illinois, and Representative Cindy Axe, Democrat of Iowa, have introduced retroactive unemployment income tax exemption legislation. And as we all know, unemployment compensation is taxable for federal purposes, and some states also tax it. The legislators are concerned that taxpayers will have an unpleasant surprise when they file their 2020 tax returns and find out that they owe tax on this unemployment income that they've received during the year. And many taxpayers will receive a significant amount of unemployment due to layoffs, furloughs, and so forth, mostly as a result of the pandemic, and could face substantial tax liabilities over this because we not only have the state amount of the unemployment, you also have the bonus given by the federal government. Anyway, this legislation will extend exempt the first $10,200 of unemployment benefits from taxation. And let's look at the fallout from that. So taxpayers reading the news don't realize that this has to pass both houses of the Congress and is only proposed legislation at this point. We've had lots of phone calls from preparers saying, gee whiz, what is this new $10,000 unemployment relief? And their clients were all reading this news and thinking this was already tax law, but it's not. It has to pass the Congress first and get signed by the president. Anyway, if in the meantime, tax preparers have to delay filing returns that could include unemployment benefits pending the outcome of legislation, or risk having to later amend tax returns. So that means you have to sort of sit back and let these returns accumulate, I guess, until we find out whether or not that legislation is going to pass. And taxpayers who are counting on a tax refund will see the refunds delayed while filing the returns for is postponed pending legislation outcome. And this can create some significant financial hardships for those already desperately in need of money due to the pandemic. And unfortunately, if you're a California tax preparer, this is a second wait and see situation. Pending California Assembly Bill AB 281 would bring California into conformity with the federal treatment of deductibility of expenses paid for with forgiven PPP loan proceeds. Thus, California preparers cannot complete returns for most taxpayers that had loans forgiven pending the outcome of AB 281. This is a heck of a way to start the tax season, but this looks like it's just going to be another one of those bad seasons. Anyway, I guess you can prepare the returns up to the point of sending them and then make these adjustments at the end and e-file them. Meantime, your clients will be close wondering where their refunds are. So, okay, well, thank you for joining us, and look for our next one. Take care.